Good morning, good afternoon, and good evening, depending from where you're connecting to our Clearstream webinar today. During the next 90 minutes, we will be discussing different tax topics. So if that is what you were expecting from today, you're actually in the right virtual conference. My name is Thilo Dernbach. For those who don't know me, I am the responsible product lead for our European custody delivery at Clearstream Banking. From a functional perspective, I'm also globally responsible for our asset servicing product here at Clearstream. Many of you will be familiar with an organizational combination of asset servicing components, including elements such as corporate actions, income, tax, and proxy voting. We've added the geographic component to my role to ensure focus on client needs, specifically in the European markets context. The need and benefit of such combination of roles became particularly relevant with the introduction of Target 2 securities. As you know, this development has supported our strategic ambition to connect our clients to a T2S in-market channel in central bank money via Clearstream Banking Frankfurt. But enough of that. I'm very pleased to welcome so many interested parties to our event today. It is evidence of the relevance of the overall theme of our webinar, and it seems the timeliness of the specific topics that will be discussed today. On the last count, we have more than 400 participants joining this very first tax webinar that we present to you today. Allow me to thank every single one of you watching us here for making your precious time available. We know how tight schedules are, how busy the calendars are, and especially with only a few weeks to go until winter break, frozen zones in IT, and all the other good things surrounding year-end. Big thank you for joining. Looking back, I can say that we have not conducted such a broad and public webinar in quite a while. Other formats of client interaction have been dominant in the past, but with or without a vaccine for COVID, we firmly intend to make this event today the starting point of a regular interaction with you, with covering current, pressing, as well as forward-looking industry topics in the context of withholding tax. Allow me to introduce the team that you will see on screen in a moment. It's a very small, nimble tax product team around Hugues Besson, who many of you know well, Nicolas Godfrey, Alexander Reis, who've put this event together for you today, with the support, of course, of our colleagues from our events team. But more importantly, this event would not be possible without the contributions from the different market experts, practitioners that my colleagues will introduce as we go through the panel sessions today. Big thanks to those colleagues already at this stage as well. This is our first online webinar in the post-normal world, so please bear with us should we technically not yet perform like professional YouTube streamers. As you've just seen, we had a slight delay in kicking this off. It is not a one-man or one-woman show, but a bit like I'd like to compare it to the Truman Show, with different people working in the background, making this look very smoothly and effortlessly. So already at this stage, also big thanks to the events team. Before I proceed, allow me to spend just very few minutes on tax services at Clearstream. Many of you know Clearstream Banking as a market infrastructure, offering custody services in just under 60 markets nowadays. Across these 59 markets, to be precise, we hold roughly 15 trillion euros worth of assets for our customers in custody, of which roughly 25% are actually equities, the vast majority of the rest being fixed income, therefore. Across most of these markets that we cover, 50 to be exact, Clearstream also offers withholding tax services. The extent of the service is, of course, dependent on its market specificities, the securities and scope of the link, whether the securities that we cover are actually taxable, and eventually whether withholding tax can be offered in a particular market from a regulatory perspective. We continuously push the product and service extension in the tax space. There's particular need and opportunity for action due to the numerous developments on national but also international levels. FTT, TRACE, digitization efforts are only a few buzzwords that I'd like to refer to at this stage, and we'll come to those in much more detail during the panel sessions. When we think about proactive and externally driven product and service enhancements, we regularly consider the commercial benefit of such developments, for sure, but more importantly, we put a lot of effort into potential standardization, automation of the new processes. As operational efficiency and cost saving is and must be on your agenda every day, we also think about ways to helping you reaching those continuous improvements and cost saving targets also in the tax space. And in this context, the efforts of regulators, the governments, but also tax authorities to harmonize, automate, and digitize processes related to the interaction with them is music in our ears and helps us deliver more scalable services ourselves to you. In a recent survey conducted by ISA, an industry association that many of your companies will be members of as well, has clearly shown that the need to solve a number of internal challenges is real. Many of these sound familiar to you. Just to mention a few, the need to replace legacy infrastructure, to develop interfaces and use APIs for interaction with third parties, the need to be able to scale up operations on a relatively stable cost base, or just the need to improve digital capabilities in general. We at Clearstream are addressing all of these elements, and the survey results of ISA suggest that many of you are as well, or at the very least, thinking hard about the execution already. And the panels today will certainly pick up on some of these themes in the discussions that we will have in the next 85 to 90 minutes. But to slowly drag the conversation into the direction of the topics of today's webinar, allow me a little analogy that who would have thought makes reference to COVID. 2 weeks ago, and again a few days ago, it was announced that COVID vaccines are on the horizon with effectivenesses of 92, 95% plus. And by the way, allow me to congratulate those amongst you who have invested early into the companies that provide these vaccines, as I'm sure that will make your Christmas shopping a whole lot more exciting. If I use the analogy of the vaccine, I will say that today we do not claim to be able to resolve 90+% of the issues in the tax space, especially in this webinar, but we will isolate the most painful illnesses and start addressing them and discuss targeted vaccines, if I may say, for different aches and ails within the withholding tax service universe. In that context, we do take note of the increasing breadth of activity and pace at which regulators and governments are pushing for more harmonization, also in our little withholding tax corner. TRACE is a prime example, digitization, as I mentioned before, another. I'm about to publish a little blog on LinkedIn in the coming days where I will wonder whether all this coming change is actually real and will lead to market improvements, or whether it's just Groundhog's Day and we're hearing the same harmonization song on the radio yet again. But I don't know about you. For me, I must say it feels different this time. There seems to be a genuine willingness and drive to improve the European environment, and perhaps the pandemic has just given these efforts the extra nudge required to actually move forward with harmonization and, more importantly, digitization efforts, at least at a European level. I'm certain that the esteemed expert panels will cover some of the items that I've just brushed over in much more detail and with their expert views. A few last organizational things before I pass the mic on to the moderators and the panelists. You will be able to ask questions during the entire session. We are showing, or will be showing you the website as well as a passcode to be using on Menti. I would like to ask you to please access Menti with the link that we show using the password mentioned. And if you have not already done so, you will be able to ask questions during the sessions. These questions will be seen by the moderator and will be considered in the context of the respective panel. Hoping to receive many questions, allow me to perhaps already apologize now to you should we not be able to cover all of them, but we'll endeavor to do so. For obvious reasons, there's no coffee break foreseen, no joint coffee break at least, so please ensure that you remain hydrated at all time. We will add our bit by making a sometimes dry topic as interesting as relevant as possible. And last but not least, after the webinar, we will send you a short survey, as we would be pleased to hear back from you in regards to improvements that you would like to propose to the process here, to the structure, but also to hear back from you whether there are other relevant topics that we might not have covered today, but that you would like to see covered in the next sessions. So to the agenda. We will start with TRACE and a short update on the developments here by my colleague Nicolas, looking at Finland as a showcase, and then discussing the topic with the panel on the topic itself, and looking at the roadmap, the expectations from the panelists around TRACE in Finland, but of course, well beyond that. Let's see if they share my view on whether the glass is half full or possibly half empty from their perspective in regards to trace. We will then continue with the second panel on text digitization, a very timely topic in my view, and one that will drive a lot of change in our servicing industry. And I hope we hear more on what is on the horizon there from the panelists of this topic. And then we will finish off with our evergreen, always relevant US tax topic. As I said, questions can be asked at all times. They will be woven into the discussion as appropriate and where possible. And last but not least, I will spare you all the health and safety messages that you would usually hear on such occasion when we sit together in large rooms in the hundreds. I will not control how and with what sort of liquid you stay hydrated, nor will I remind you where to find the fire exit in the location that you're at. So please do take care of these things yourselves. And with that, I would love to hand over to my colleague Nicolas for the first update on Trace, with a few words from him initially, and then we enter right into the discussion with a panel. Enjoy our webinar, stay safe, stay healthy, and over to you, Nicolas. Thank you very much.
Hello, everyone. So welcome to this first panel discussion, Trace and After. I can see that the panelists are now joining the session. Welcome to all of them, and thank you very much for being here with us today. I will first quickly introduce our panel participant. Obviously, all of them are subject matter experts in financial services and operational tax. I will start with Kerstin Tines. Maybe you can show your hand. Hi, Kerstin. So Kerstin is a partner at PwC Luxembourg. We also have Paul Radcliffe, a partner at EY UK. We have Jean Quizito, who is an associate partner at KPMG Luxembourg. And we also have Nenad Ilic, who is a director at Deloitte Luxembourg. So thank you again to all of them to be present into this panel and bring their expertise on the topic of trace. Maybe I'd like to make a small introduction about Clearstream positioning regarding trace. Thilo briefed you a little bit about the strategy of Clearstream. Obviously, we want to support relief at source as much as possible and maximize the value to our client. And so obviously trace is something that we are looking at with great interest. We want to support the authorized intermediary system. Now it is deployed in Finland. It is obviously a great challenge for AI and Clearstream is working toward getting this status. It's a great challenge for Clearstream, but it's a great challenge for the market in general, as becoming AI, of course, means a lot of responsibilities and also potential liabilities in case of reconciliation issue or situation of under-withholding. And we are still heavily involved in discussion with the tax authorities, with the market in general, with our local tax advisor, as the tax authority are still publishing guidelines to make sure that everyone can be ready by 1st of January. But the discussion of today is much larger than Finland. As we all know, TRACE is an OECD framework, and it's going to be deployed probably in other markets as well. But I think the first important question is, so far, of course, we will see it live in Finland 1st of January 2021. But do we feel that TRACE and the implementation in Finland really meet the expectation of what it was designed for? And I think we all have in mind harmonization, simplification. And so for that, maybe I will turn to Paul. Paul, if you wish to remind us about the TRACE journey, where is it coming from and where is this heading, in your opinion? Paul, are you there? Does anyone else wants to pick up the question from Paul? Sorry, because Paul seems to be frozen. Maybe Nenad, can you give us a little bit?
Well, the TRACE journey has been going on
sorry. Paul
a number of years. I spent a number of years. You can hear me okay?
It's a bit difficult. Just try again, Paul. Otherwise, I will end the speech to someone else. Can you restart, Paul? Sorry for this.
Can you hear? No, Nicola.
Yeah, we can hear you. Just go ahead. Yeah, no. So Paul has some technical difficulty, but it's fine. We have a great panel with us. So I will just turn to Nenad. Nenad, if you can update us about the journey. Where is it heading? And you are also aware about the ongoing EU initiative, and I think that's really relevant for our participant today. Please, Nenad.
Sure. I mean, as many of you and participants know, TRACE is not a new initiative. It's actually fairly old nowadays. If I can perhaps begin with the spiritual parent of TRACE, it basically dates back to 2001 with the QI regime that at first implemented this kind of facilitated relief at source that was kind of picked up by the industry also and by the OECD to invent kind of a multilateral, harmonized, worldwide relief at source system. So conceptually speaking, it's a very, in my opinion, it's a very smart piece of it's a very smart framework, so to say. The point is that I mean, as you know, so far only one country committed to have a kind of a very exhaustive implementation of TRACE. This is Finland, which is, I think, a good start, although a bit late, but still a good start. That said, I mean, the only issue is that Finland is not the biggest market. So basically, it's something. If we have that for other countries, bigger markets as well, that would be indeed, I think, a very positive sign. Now, in that respect, I think it's also, as you alluded to, Nicholas, it's interesting to know that the EU Commission also is now seriously considering creating a legislative proposal to implement TRACE within the EU. So there have been discussions over the last couple of years, and there have been reports about the difficulty that taxpayers face when reclaiming the taxes, various procedures, processes, complexity of tax reclaim forms. The EU Commission even quantified the amount of the cost that it costs the EU taxpayers to reclaim their taxes within the EU. There's a report dated 2016 that the price tag is 8.4 billion euros. That stems from unreclaimed taxes, that stems from costs for the associated with the reclaim process, etc. So that's a huge amount, those 8.4 billion euros per year. And I suspect it's not disclosed in the report, but I suspect that most of that cost is supported by small investors. Bigger investors have the possibility to, appoint a tax advisor, pay some money, and get their taxes back. But smaller retail investors, those are, I believe, the ones that suffer actually these costs. With that in mind, I mean, we have this proposal. It's actually part of the EU tax package that was released in July 2020. And I mean, it's the first time, and that's why I'm personally reasonably optimistic this time. It's the first time that the Commission really speaks about an actual legislative proposal. In other words, a directive that would implement a harmonized, digitalized, Europe-wide relief at source system. So we are now at the very early stages of that initiative. I had the chance to speak with the person actually who is drafting or who is working on that proposal. There will be roadblocks, so to say. Not all member states are willing to put efforts to create such a system. But at least, the Commission, there is willingness from the Commission, there's willingness from the EU Parliament as well. So we have some positive signs for such a European framework.
Okay, thanks, Nenad. Very useful. Maybe now that Paul is back with us with a better connection, I hope. Paul, do you think that so Nenad was mentioning this is happening now at the EU level, but do you see a risk that the current situation with COVID and of course budget deficit might derail this willingness of government to simplify relief at source, which in the end could mean we understand what Nenad said about cost saving in terms of the operational process, which could be a benefit for the tax authorities and the taxpayer. But what about, tax authorities having to give back money earlier in the process, as we know that in certain market reclaims can take 5 years to be paid back? Do you see any risk that Trace could be impacted, or Trace or the similar EU initiative, of course? Please.
Yeah, I think that's an interesting question, right? And I was involved at the OECD project that gave rise to Trace. And there was always some skepticism on the business side as to government's interests in paying out tax amounts quicker and faster. But personally, I think that's probably not a big barrier. And the reason I say that, it cannot be a policy intent to enter into a treaty with another country and then to put grit in the system not to give treaty benefits. And it just really cannot be, your policy intent. And it just strikes me as being peculiar. So I don't think that balancing budgets necessarily should be really impacting, I think, this part of the debate. For me, I would say the crucial point here is the CE part of Trace, compliance enhancement. This is the crucial thing. So, and forgive me, because I dropped a bit in when we were having the initial discussion. I don't know if it was sort of mentioned, but let's not forget, what's the biggest fraud at the moment in the European Union tax? It's cum-ex, right? And how would you solve some of these issues? It's through a better withholding tax system. So that's what I think the debate needs to go to. And I would also argue furthermore that Trace, as was, is perhaps not quite as robust as it needs to be to handle some of what we now know, what's happened in the decade or so since Trace came out. And I think if we can shift that, if the tax authorities can get perhaps more what they need, coupled together with the Capital Markets Union plan, the Action 10 we've just talked about, that's maybe where this all comes together. You have all three of the actors getting what they need: government, the taxpayer, and the financial intermediary. And you have to keep all of those interests harmonized. That's my slightly long answer to probably a short question.
Okay, thank you, Paul. Because definitely we know that this project has been out for a long time. Finland is the first adopter, and as Nenad mentioned earlier, we need to see adoption by bigger market for this system to have a meaningful impact. Now, maybe turning to Jean. We are also seeing in other markets different trends. And for instance, we'll have a specific panel to talk about digitization. But if we look at tax process, we also see some countries going towards digitalization of tax reclaims. Do you think that this trend is competing against Trace? Do you think that some markets are definitely working toward more tax relief at source? Or can they both live in parallel? For instance, we know that in Switzerland, German beneficiaries will have to file a tax reclaim via an electronic filing process. What's your opinion about that, Jean, please?
Well, Nico, indeed, as you correctly mentioned, there is a trend towards digitalization, and I think also this whole COVID situation is going also to accelerate that. So prior to COVID, I think we were all used to faxing and filling in forms, but I would almost say thanks to COVID, so they have been really an accelerator. People have been used to not having all the signing that needs to be done on paper, so there is much more acceptance of doing things digitally. And as you correctly say, there is really a lot of trends toward that. That being said, even if the different countries will go into more digitalization, what we really need and what I'm really hoping that Trace in Finland becomes a success is because what we really need is the harmonization of the process on its own, because investors are typically invested in many different markets, and what they want to know is that if I want to have a relief at source in Germany, in France, in Italy, in whatever market, there is actually a kind of process that I can follow. There is a kind of a guideline in which I can follow. And I think this is kind of the promise of Trace. Now, it is a bit unfortunate that Trace is coming only being introduced by Finland and not on an OECD level. But let's watch Finland, and we're already crossing fingers to see whether Trace can be a success in Finland so that other markets can follow up. So the first initiative might be, as Nenad said, indeed with this EU directive, if one does come. But so digitalization, I think it's a good thing, but what we're really looking forward to is more harmonization of the systems.
Thank you, Jean. Of course, we are all mentioning Finland as being the first. Does any of the panel participant has more information on the next countries in line? We heard Denmark, we heard Sweden, but maybe Paul, I see you nodding. Do you have information to share on that, please?
Well, I don't have the inside information, but I think you're right. I think Denmark, Sweden clearly are doing something that has flavors of trace. And I just want to say one thing on that. There's a danger here that countries adopt versions of trace. And that's a problem, right? Because what do we want? We want standardization, simplification, certainty. If it breaks, it balkanizes, you've got a problem. I think over and above those two countries, I think there's other countries in Western Europe that are conceptually interested in perhaps where trace is going. I think the Netherlands has perhaps been in the mix at certain points, looking quite interestedly at that. And at some point, I think the Canadians were looking at this. So I think, again, I think it's been said a couple of times now, Finland is really important. If it works well, if it works smoothly, I think it has a great part in this debate. But it's the Commission, I think, what we've already talked about, that supercharges this.
Thank you, Paul. I think one of the challenges that we also need to discuss is obviously the technology. Trace is going to be a technology intense process, as we will need. I mean, the AI will basically need to report a lot of information to the tax authorities. They will need to validate the status of the beneficiaries. And we know in our industry that we have long custody chains. So a lot of challenge there. So maybe Kirsten, as you are very familiar with the US QI process, which share a lot of similarities with the AI regime, do you see potential to leverage QI process and technology for the purpose of trace? Do you have any meaningful information that you could share about that or view? Please, Kirsten.
Well, yeah.
You are mute, Kirsten.
Interesting question. No, my mic is on.
No, sorry, Kirsten. It's okay now. You can go ahead. Sorry.
Right. Okay. Good. So interesting question. Indeed, I mean, I'm convinced that to a certain extent we can leverage on the qualified intermediary regime. The issue is that, I mean, QI is with one country only, yeah, and trace would be with multitude of jurisdictions, so meaning working with matrices, and of course QI is all about paper documentation, and I mean you cannot manage trace using paper documentation. So this is certainly something where we need to have a link with digitalization, with new standards, because you need to prove certain documentations that they are valid, and perhaps even combine databases, etc. So I think that's something where work is needed. And I mean, we have seen for FATCA, FATCA was introduced by the US, and it was, well, an easy copy paste of FATCA to the OECD CRS, to the EU directive in that respect. So, but it was a copy paste of something which was relatively concrete and precise in terms of approach. One thing we cannot have is, as Paul said, something which is not harmonized, yeah, and also looking at things like DAC6. I mean, sorry to say that, but that's operationally a nightmare because it is so vague, leaves room for interpretation, and each country takes different views and interpretations. So if we leverage on QI, we must, and then trace, OECD trace, we must make sure that it is somehow operational and harmonized.
Indeed, thank you, Kirsten. Just allow me to thank the audience, as we are receiving very interesting question, and we have a very interesting question on the possibility to see. I don't know when. I don't know if there are any development in that regard, but is it too early to talk about potentially a EU-wide withholding tax? Because here we are just talking about traces and harmonization in terms of process, but can we foresee an EU-wide withholding tax? Nenad, I see you seem to be very skeptical.
Yeah, indeed, I'm quite skeptical on that one, because I mean, the nice thing with trace, and that I think is something that will be used as an argument to kind of try to push trace, push the implementation of trace within the EU, is that, I mean, the regime doesn't change tax rates of the countries. They basically they just continue to collect the taxes they are supposed to collect based on the treaties they have signed or based on their domestic laws. No tax law is changed, no tax treaty is changed, no tax rate is changed. And that's, I think, the main argument that plays in favor of the EU trace. Now, if we start talking about harmonizing withholding tax rates and having a single rate within the EU, if I understand the question correctly, I think that's going to be much more difficult, because here we are impacting the revenues of the various member states. And in these matters within the EU, as most of you know, there could be discussions, but I think that those discussions, I mean, I can't really imagine that we would have a directive in that respect anytime soon.
Thank you, Nenad. I just want to go back on what you mentioned, Kirsten. Harmonization will, of course, be very important. And, things will become very meaningful when we will see bigger countries move under the trace regime. But if we look back at the concrete case that we have in front of us, which is Finland, I think we can already see that the system was, I would say, very simple at the beginning, and now that it's going live, we see also complexities that are being added one after the other. And potentially, if the financial intermediaries are not buying into the system and are not willing to become AI, the market could more to actually a shift towards more tax reclaim instead of relief at source. Do you think that this would be, I mean, looking at the volumes between reclaims versus relief at source, do you think that will be a key factor to assess or not the success of trace in Finland? And if we see that, does that mean that we could expect also some change in the approach that the Finnish tax authorities are taking towards trace? I see you, Paul, nodding. Maybe you have some feedback to share on that.
I think this is a really interesting question, right? Which is around how do you measure success? I think that is, and it's going to be fundamental. What I think is going to happen is my suspicion is the majority of the large global custodians will become authorized intermediaries. I have probably little doubt that will be an outcome. However, what I think will happen is then there's going to be a very active debate or discussion within those large custodians, those large AIs, about who are they going to offer tax services to. They're going to be thinking about the risk. So for those of you into the detail, they'll be thinking, do I give services to a contractual intermediary? Do I like the look of them? If I have clients who are perhaps entitled to a lower rate than the 15%, where I need to do enhanced diligence, do I want to give treaty benefits to those people? If my client is involved in securities lending and borrowing in, do I want to give treaty benefits to those guys? So I think what may happen is you'll have everyone being AIs, but perhaps restricted services for a period of time whilst people think through the risk. And I actually think there's a bigger point here, which I'm going to say, which is I think this is going to create perhaps a risk discussion within a lot of big banks around what they do. And they'll be looking at other markets as well. So I do think that's going to inform a wider point around tax servicing. So that's kind of how I think it's going to play out in terms of perhaps this, go live and the servicing dimension. So restricted services, perhaps, for lower risk clients.
We can't hear you,
I'm
Nicholas.
trying to unmute.
Sorry, I'm
yeah.
mute.
So-
Sorry, everyone. No. So I'm looking at the question that
just-
we are
just to-
receiving. So again, thank you very much to the audience for this. It's a very interactive session. So we have a question from the audience on the scope of instrument that Trace is supposed to cover. I mean, we believe, it's towards relief at source. So if you have a relief at source on any type of instrument, Trace could apply. I don't know if anyone from the panel has a different view about that. But for me, Trace is not instrument specific, right? I think we all agree on that. So I hope this is the answer that the audience was looking for. Now we all know pretty much the QI framework and the QI checks, the QI audit. How is that going to translate in for the Trace framework? Is it something that one of our panel participants want to pick?
I can pick it up if you like, Nicholas.
Yes, please,
So,
Nenad. Thanks a lot.
in the Trace framework, and basically deriving from the QI regime, it is foreseen that an independent reviewer reviews the compliance with the various elements of Trace documentation, withholding, reporting. That has been partially taken over by Finland. Finland does not impose an external review. However, they leave the option for an AI to appoint an external reviewer if they want to, get some comfort as regards their compliance. Now, referring to the EU initiative, I mean, at this stage we don't have that kind of details, but I guess it will depend on the feedback Commission will get from Finland and other Nordics that may implement Trace in the short term run.
Thank you, Nenad. Going back to the technology discussion that we had, I think we all know that the validation of BO is one of BO information that's kind of at the core of what Trace is trying to do. We know that this is a fancy keyword, but maybe Kirsten, I think we talk about that already. But do you see something like blockchain, having potentially an impact on tax processes in the future? Maybe not the near future, but at least in some future. I don't know if you can give us a bit of insight on that. Not an easy topic.
Yeah. I already regret that I mentioned that term blockchain during our preparation for this panel. So I'm not an expert on that, certainly not. But I mean, and we will have a digitalization panel. Perhaps that's more a question for them. But I mean, the beauty of sophisticated technical solutions would be that tax authorities, financial institutions would have at the same time real-time validation opportunities. So I think this is what everybody is dreaming of. So not to wait for months that somebody sends you a paper form or enters something on a website, signs then the request and sends it by email. No, we really need this real-time technology, and whatever tool we use, if it's blockchain or not. So we have heard from some people we talked to that they think blockchain would be a solution for that, but I'm not the right tech guy for that.
No, we have a specific panel for that, but I think it's kind of a fancy topic, but we can potentially see the added value that blockchain could bring into this issue of validating BO in long chain of intermediaries. We are close to the end of the allocated time. I wanted to ask if you have any feedback on the potentially the interest of financial institution in general for this AI status. Paul, you are talking a lot at industry level. Do you see a lot of your clients or your connection that are working towards getting the AI status, of course, for Finland first and then for the other markets? Paul, please, can you enlighten us?
Yeah, so as I already sort of said, I still see clients are now mobilizing to determine whether or not to become an AI. So we're seeing the diligence on the risk parameters, the diligence on how they would control it becoming, if they were to become an AI. So that's clearly happening. I think, again, my sense is, as I said already, the major custodians, big globals will become AIs. At EY, we ran a poll actually at a recent conference. I was trying to judge actually how excited people are by Trace, because I think that gives you a sense of, will people adopt, will people embrace? And what was interesting, I'm just looking at the numbers now, 64% of the audience actually thought we would get to a reasonable level of adoption within the next couple of years, next 5 years. And if we'd asked that question, I think five years ago, I would not have been coming up with a 64% number. I'd have been down at about 10%, I think. So I think that's an indicator. I think this will be a success in Finland, and we'll have to then see what actually happens for the wider adoption.
Thank you, Paul. Very interesting insight indeed. So I think we have managed the time really well. We are very close to the end of the panel. Let me look if we have a few more questions. We don't. So I mean, we are anyway just on time. We managed timing really well. So let me just tell you that we are going to move to the next panel that is going to talk about digitization. And you hopefully will have some very concrete insight about this topic. Maybe turning to the panelists, if you have any last comments, as we still have 1 minute left, please feel free to just share it.
Well, I think a last comment that I would make is about, so what will determine...
I just wanted to add something.
Sorry, Kirsten, Jean was already going through his please, Jean, go ahead.
I think one of the key things that AIs will consider in determining whether they want to enter the system or not is whether they correctly understand the responsibility. So I think understanding the responsibility and also the fact that they will be liable for the underwithholding, this is something that is also going to be taken very much into consideration. So what we don't want to see, we don't want AIs to be overly, let's say, prudent and not willing to actually provide the relief at source, to provide the treaty benefits, which would then ultimately lead to even excessive reclaims because clients would have been taxed at a maximum rate because the AI would have been too prudent. So I think that is one key where I think it's essential that it's implemented correctly so that the relief at source can be eventually successful. That's my final comment.
Thank you, Jean. Kirsten, you also wanted to add something, please. If you want, go ahead. You are mute. Yeah, you're back.
Yeah, can you hear me? Yeah.
Yes.
Yeah, I have trouble with muting, unmuting. There is a time lag. So, in fact, what I wanted to add to what Paul, but that also goes into the direction of what Jean just said. It's all about risk, and we have seen for the QI regime that notably at the beginning, people were refused to collaborate with non-QIs, due to the more workload, the risk you would take. And I think this is something where we need to see how AIs will accept to work with contractual intermediaries, and how they allocate the risks towards each other. Because, of course, if everybody says, well, I only deal with AIs, on the long run, this will not work. So we need this collaboration and discussion about risks and which withholding rates effectively to apply.
Thank you. So we are now past the time, so we need to close this discussion. Anyway, Trace is a very large topic, a very interesting topic. Let me again thank all the panelists for this session, which was very interesting. And to the audience, please stay tuned because we have another panel coming, which will also be very interesting. Thank you, everyone.
Thank you, Nicolas.
Thank you.
Hello, hello. So, okay, apparently you can hear me. That's the principle. So I do not know what Thilo just mentioned. But, okay, super. I do not know what Thilo mentioned, but let's hope that Trace, will go into the right direction, that we will have some simplification, harmonization, amongst all the countries. Paul mentioned that he started the trade journey, 10 years ago. And I hope that it will not take another 10 years, that Thilo will not say during a webinar, in 2020, I discuss about Trace, and in 2030, not yet done. And also, I saw a question about, what Clearstream intend to do, for Trace in Finland. We are really envisaging, to become AI, authorized intermediary. That will propose a service of delivered source, to our clients, which may also become AI and some proprietary accounts, not sure yet, and we do not think that we will propose a delivered source, to CI, so to CI, so the one having not, having not a relationship with the Finnish tax authorities, becoming not AI. Potentially we may not offer the service yet. We are still discussing, with the Finnish tax authorities, so nothing is defined yet. We are planning, to announce you within 1 or 2 weeks latest, the service offering, and we will keep you posted. So next panel, is digitization. I do not see the speakers, will come to you in a couple of seconds. We will have 5 speakers, 5 specialists of digitalization, of digital world, Yeah, it's me. Okay, great. So let me introduce you to this digital panel. We start with ladies first, Manuela Abreu, who is associate partner, with EY Luxembourg. She's leading the tax reclaim and asset management team. I see the years of experience, Manuela, but for me, you are younger than that, so I will not mention it. And you're managing risk and size tax opportunities, to a wide range of investment funds. So you are really, able to talk about digitalization with us today. We have Romuald Poos. Romuald is a senior consultant with Bearing Point. Experience, more than 15 years experience, with various banking institutions. And Romuald also help, a bank, into the operational tax digital transformation. Steve Idrissou, from Atos. Atos, it's a leading law firm, member of the Taxam network. Steve has more than 8 years experience in advising tax, around the world. Steve is graded. He's very lucky. He's graded, from the Paris University, close to the Panthéon. So you have very lucky, to study close to this famous monument. Jean Diedrich, is partner, managing partner, with Weston in Luxembourg. Very active, in the development of the European digital single model. Jean is also chairman of the APSTI, it's the Digital Professional Association here in Luxembourg. And last but not least, he's also board member of Digital Europe since 2019. And Jean is not a robot, Jean is specialized in digital, but he's not a robot, can talk to you without any problem. So last but not least, Laurent Collet, partnered with Deloitte, specialized in financial market and market infrastructure. more than 20 years experience that he started, with JP Morgan. And Laurent also went to school, in a college, for bad boys, 35 years ago. And next to him on the school bench, it was another bad boys, who was myself. So I know Laurent for more than 40 years. So let's start now our discussion. We will talk about digitization or digitization, when, we are working all together, in a huge paper-based process, with wet signature. Due to the pandemic, we have seen that this process, show its limits, that it was quite archaic, to still work with paper-based, in 2020, that we still need a stamp, from local tax authorities, in order to for certificates of residence, on the tax claims. That's why, tax authorities, started to think a little bit, they authorize some digital signatures, they are starting to move. But it seems to me like it's still like a baby, he's trying to walk, he's trying to stand up, but after he's falling, he does not know exactly the direction to take. And I just would like to check with you, what we should anticipate, and going to this digitization. Is it just digitization called, okay, we will take an Excel spreadsheet that will provide, to the tax authorities, or are we going directly, to a full digital transformation? And I don't know, maybe Manuela, ladies first, to start to talk.
Thank you. Well, thank you very much for having me today. On your question, I don't think that digitalization is a myth, but it's still not a reality for a lot of the tax administrations. And when we talk about what is digitalization, we can talk about many different things. We can talk about robots, we can talk about automation, we can talk about data processing, we can talk about big data, cloud computing, and even the future. Is this the future? Well, I think it is, but it is it's very paradoxical when we talk about digitalization. I remember one day being at a conference and a client, at the end of the conference, it was about tax, digital, etc. He called me at the side and he asked me, when you talk about these robots, are we talking about, the white circle man type of thing? And I said, well, no, we're not talking about that. That's a bit in the movies. We're talking about algorithms and we're talking about other things. We're talking about systems. So for us and for the work that we do at EY, it is a reality because we have integrated in the way that we work, we have integrated softwares, we have integrated automation in the way that we complete the forms. But tax authorities are not at the same level of digitization. So we do see that there are some authorities, there are 5 levels. The way that we look at tax authorities is there are 5 levels. The ones that are still on level 1 are the ones that are still paper-based. You still file the forms in paper, and there are tax authorities that are much further than that. And ultimately, they will not need even tax, they will not even need paper. But this is on the corporate income tax side. On withholding taxes, as you mentioned, it's still paper-driven. We saw advances due to COVID. Why? Because the tax inspectors were not there anymore. So we do see that some authorities like Denmark and Sweden, where you already do it digitally, they are fine to accept digital documents. But there are some authorities that are more formalistic, are more paper-driven, like Poland. They still want to see the papers. They still want to see the wet ink on the documents. And then you have some others that are still in the middle. There's not real clear guidance. We are going to send documents in a digital format, hoping that everything is all right, but we are very conscious that they may come back to us and ask for the original. So there are different levels of digitalization right now.
Thank you, Manuela. Maybe Jean?
Yes, I think from a digital perspective, I agree fully with Manuela on that most tax authorities are still paper-driven. It's for the moment a competence of the member states to cash in local taxes at member state level. I think there's also a confusion of terminology when we speak about digital in general with administrations or in the European Union, because there is a tendency to move from paper into a dematerialization. What does it mean? Meaning paper is unstructured information where you have manually treated. If you make a dematerialization, you keep the same unstructured information, which is very complex to enter into a computer, a machine. So it's not adapted to a digital exchange. So what we need is we have to review the way policies are made, that they are more compliant with digital tools and the digital collaboration between the tax agencies, the financial intermediaries, the taxpayers, if they are citizen or corporates. So this is a huge challenge, and this will also cost a lot of money. On the top of this, I think that there's a huge complexity we will not get rid of in the next years. So we have also to think about something Europe has installed in other information systems like Schengen Information System, or TaxSud, which is on customs, where there is an interoperability between the different digital systems in different member states. Probably this could be, if I look now from my EU digital hat, I would say this is probably something we should try to do that way. I don't see a single system in the next years because it's huge and very complex. There needs to be a lot of harmonization, simplification, and so on. And this is something that will take a lot of time, and I don't think this will happen like this, especially now with the crisis. So I think we have to give guidelines on how the different member states should move into the digitalization. We should think about an interoperability. First, perhaps start small with minimum interoperability, and then perhaps grow that to something more integrated, like we have done with Schengen 1. Now we are in Schengen 2. So I think Europe is capable of doing, but it will probably take, I don't want to be too pessimistic, but 5 to 10 years to move there.
Mm-hmm. No, it's a very good point, Jean. And I've got also a question. It's true that, for each member state, and even over the world, digitalization may have some different signification. Meaning, for one country, it may be still a CD-ROM to be sent to the tax authorities. For another, it can be an Excel spreadsheet, and for the last one, it can be access to a digital portal. And then, we may end up with various solutions. I don't know what you feel, what you think, Romuald.
Mm-hmm. Yes, of course. Digital solution may enable new type of innovation and creativity, rather than simply enhancing and supporting traditional methods. So what we can say, digitalization is not just dematerialization. It's just about automating process, but about rethinking the whole processing chain. So from dematerialization to digitalization, there is a range of possibilities. The first level, of course, is simply dematerialization, less paper, use automated interface or CD-ROM or things like that. The second level could be, for example, RPA or artificial intelligence. So we have to define some rules, for example, in the context of the withholding tax process. We can define some rules in order to fill various form, depending on the country. And we have, of course, the blockchain and tokenization, and maybe some part of the process could use this kind of technology. I think about, for example, reconciliation in QA. For example, it could be a good process to make a kind of good example, and to see if this technology has really impact on the process, on efficiency, and also on the quality of services delivered to clients.
But here I will talk on behalf of my peers, attending, to this webinar. The financial institution do not have the necessary resource and the budget, to meet all individual requirements. We cannot say, for France, we have to build something. For Germany, it will be something else. It will end up, by European Union is looking for harmonization, simplification, because it's too costly. But if each country has its own digital portal, let's put it like that, it will be very costly, for the banks. I don't know what you think, Laurent.
Yes, well, first of all, Luc, thank you for having me this afternoon. Thank you to Clearstream. I like your reference in your introduction when you mentioned the baby. Yes, indeed, digital is still in the early stage, but for sure, this baby will become a strong adult. But as my colleague has already mentioned, in the evolution, there is this concept of definition. What do we mean by digital? And this is important to have a common understanding within Europe. With that regard, I think it's important to raise the fact that the European Commission has raised a few weeks ago a huge package of document and regulation, still in draft mode, but which will drive the common definition of this digital solution in Europe for the next coming years. And I think this is a key and an important framework that's been delivered by the European Commission to help this baby to go to the second stage of maturity. Now, I think what is also important, and there are two elements that we need to take into consideration with digital. The first one is that as we are in the early stage, it's important to identify the right business case. What do we want to do with digital? Which area do we want to cover? And probably we need to go on a stage-by-stage basis and not a big bang approach. It's important to focus on the application of the right technology on the right place on the value chain where we will bring efficiency. We've seen recently early this year, that Clearstream has launched this initiative with HQLA and digital assets for collateral. It was the perfect case of applying the technology on the right need for the business. And I think this is a right approach in growing and implementing the digital solution in the financial world right now. And the second point, if I may, that I think it's important to take also into consideration is that, digital is not a magic wand, in the sense that it will not solve some key issues that you may have in your organization, like the quality of your data. If you have no good data quality, you can apply the best tools of the world, the quality will remain the same. The other element also, we often see, we will use machine learning to enhance some process. That's fine, but keep in mind that machine learning means that the machine has to learn, and to learn, the machine needs to digest a lot of information, a lot of data as well, and proper and quality data. So before jumping in digital, it's also important to make sure that you have the right framework to put the technology on this framework to benefit from the process efficiency actually.
Thank you, Laurent. A quick one now before we finalize this panel. A quick one for Steve. A quick one, but not for necessarily an easy one. Digital signature. We have the chance with you, Steve, to have a tax lawyer. do you think that digital signature will be accepted, in all the countries? Due to COVID, we have the chance that some countries already accepted digital signatures, but it will be extended, to all the countries.
Yeah, I will make a very short answer here. Yes, definitely, we will have to accept digital signature. Then the question is how we will secure those digital signature and what system we will use between the countries. And I think that's just a matter of having the right system applying by the tax authorities and the various tax authorities with their own system. So yes, it's already in place. It just has to be moved into the digital world, I would say.
Yeah. I want to add there that anyhow, the European administrations, the civil servants, they are obliged to use a system called eIDAS. And this eIDAS already is giving an interoperability between the authorities of the different EU countries. This is mandatory, but it's not mandatory for the private sector, meaning for financial intermediaries and for taxpayers. And we have seen now in other contexts that, of course, Europe has to come to a conclusion on this and find a system that the different electronic signature platforms have an interoperability, and everybody is recognizing at the highest level the signature coming from another member state. So I think there's also an interoperability to put in place. I believe that this is very important. The other topic linked to the digital signature is the origin of the signature, means the ID. And there is also a topic on digital IDs in the European Union, having certificates linked to ID cards, for example, or passports, in order to have the source of origin, as some people were saying here in the panel, is at a certain moment, we trust paper, we don't trust the PDF, or we don't trust the digital information. The question is the paper really an original, or is it just a copy of something which has nothing to do with reality? And there is also a change of mentality to do, that we trust paper, and we are very much reluctant to the digital information we receive, and we question it all the time. So there's a mentality change also to bring in probably education and bringing people closer to digitalization.
Yeah. So I do understand that really, digital signature would be already a first step, that we all agree about that, to start with digital signatures. And okay, I believe that we will have to close here, this very interesting conversation. I propose to meet, again and to talk again within 1 year from now, when the baby will stand up, the baby, we try to walk for the time being, will stand up, and then we will see the direction it will take. Maybe yes, in 1 year from now, yes, he will be able to walk. So thank you very much. Thank you all of you. It was really great. It was really appreciated. And I hope that all the participants, enjoy like I enjoy, this discussion. Thank you.
Thank you.
Thank you very much. Thank you. Bye-bye.
So, Thilo.
Yes, sir.
Do you have a digital signature?
Not yet, but I can use my fingerprint. Perhaps that works as well, or my iris scan. I don't know. First of all, apologies to everyone. My headset ran out of batteries. What a, how ironic. So if I have a new headset, I hope everyone can hear me well. Thank you. Hugues, I thought that was particularly interesting because digitization, of course, is a key topic. I was listening to a webinar yesterday called Rise of AI, and they were talking, of course, about artificial intelligence and all these good things, and how just coming back to the very last sort of comment and remark and observation that there's still this hesitance to go digital, right? And the same applies obviously also in the AI space, which is quite natural, but we have to overcome these things, and we need frameworks and guidelines, or a playground in which we can do that. And but the fear has to be overcome. Otherwise, it's not going to be happening either in this space or elsewhere. Quite honestly,
Yeah,
I don't know
and,
what your view
you
is.
know, if I understood, and we have to pay attention to the vocabulary nowadays. It's that we have digitization, which is the conversion of data into a system, compared to digitalization, which is a full transformation, of the tax operational model. So, we have to start with digitization, which is sending, conversion data, from a potentially a certificate of residence through an Excel, whatever, to the tax authorities, which would be a first step. Digitization and digitalization, which would be, to insert data into a web portal, from the tax authorities.
Indeed. Yeah, I come back to one of the statements made in the course of the conversation. It's not only about the dematerialization, I think that was the word that was used, of the item, but the revamp and just the modernization of the entire process around that, rethinking that entire process. I think that's going to be key, and we'll see how that works. I think we can introduce
we can talk about US tax. I believe that Alexander will start. We have the chance today to have some US tax guru with us. It would be really interesting. I know them quite well, and I know they have a lot of things to explain to us, especially maybe after the US election. I don't know if Mr. Biden, I don't know yet. Nothing is sure nowadays. Maybe there will be some changes, and Alexander will explain that.
Let's give it up to him. All yours, Alexander. Thank you.
Thank you very much. I'm just waiting that my external colleagues, experts join. So there we are. Okay, so thank you very much, and welcome to the last, but hopefully not less interesting session called US Tax Developments. My name is Alexander Reis, and I will have this almost 20 minutes panel together with 4 external experts across the Big Four. So down under me, you see my colleague, Daniela Nishida. She is a principal in the international group of KPMG's Washington National Tax Practice. She is located in the New York office, and she is having more than 7.5 years of experience in tax. So welcome. Next to her, you see my colleague Tara Ferris. She is a principal at EY, and also located in the USA, so New York, and then having also plenty of years experience in the tax section. So you see on the upper part, on the other side, above Tara, you see my colleague Denise Marie Hinske. She's a director of the financial services in Deloitte, and she's having more than 35 years of experience in the tax area. And last but not least, you have Daniel Kenskowski. He is a director at PwC Financial Services, located in London, and he's having more than 15 years experience in tax, of course. So let's kick it off. I'm really excited to talk about the US developments. Maybe first, let's start with the US election and potentially to see the next 46th US president coming at the 20th of January. So possibly it's Joseph, or if you want to call it Joe Biden. And he is having also some nice, let's say, use and ideas how to make a bit more money for the US states by taxing rich US residents in a different way. So which leads me to the first kind of subject. So will we, what is your understanding? Will we see another tax regulation, another tax, withholding tax to be applied, being one out of 2 ICSDs we might have these US residents that are potentially a bit more familiar in our clients. So that's the reason why I would like to ask the four of you if we might see one or the other taxation coming, regulatory changes that needs to be foreseen in the next, let's say, coming years. So I would like to start with you, Tara.
Thank you. I think it's definitely possible that when we see sort of an election change with the idea that we'll have new tax proposals being introduced, there's definitely always a possibility that we might have withholding taxes. I think we also might see a shift within Treasury as well. So we'll talk about it in a moment, but we have 871M, which Treasury has been reconsidering for some time. We were hopeful at one stage in the process that we'd get more restrictive rules. With the change, we might not see that happen. We might see, kind of more the expansive rules that we were originally used to seeing with 871M. For a long time, we've also been waiting for the government to provide more reciprocal information following FATCA developments in CRS, and that was really off the table when you had a Republican in the executive branch. So we might see that change as well. With the change in the administration, sort of a rediscussion of those points about reciprocal exchanges of information and more expansive provisions regarding the exchange of information with developments in sort of the cryptocurrency space, as well as the other types of products that are a concern for purposes of tax evasion. We might see additional requirements around there as well, in addition to what you mentioned, where as a revenue raiser, there's always the possibility of additional withholding taxes. They're kind of seen as something that is less controversial, especially when you're taxing non-US persons. So that's why, for instance, we saw in the Tax Jobs and Cuts Act, we saw some withholding provisions introduced that were kind of an easy win from the administrative perspective as far as revenue raisers, and that was with a Republican in the executive branch. So with a Democrat in the executive branch, we might see more types of those provisions.
Okay, thank you very much, Tara. Denise, is there anything you want to add? You seem to be interested to start. Go ahead.
I absolutely agree with what Tara's saying in terms of some of the things that we may see. However, I think whether or not any of those things come to fruition, some of it will depend on the Senate race that's going to take place in early January, because ultimately they're going to be responsible for passing any legislation. And we could find a situation where if the Senate is still controlled by the Republicans, which there is a good chance that it will be, that will be in kind of a deadlock around these things. Now, there are certain things that the president can do by executive order that generally wouldn't be increasing taxes. He is going to be able, though, to appoint his own people to Treasury, and so the way that regulations, may be interpreted or drafted could, impact some of these areas. So that's just, my thought. I think we got to wait to see what happens with the Senate in early January.
Okay, thank you very much, Denise. Daniel, anything to add on that?
I agree with the points that were made. And if you look at the future, there's a lot of things that can change. But if you look at what's happening today, I think in terms of what we're seeing in the UK is there's a much broader focus on enforcement of the current rules. And so the Treasury Department did a recent audit of the Internal Revenue Service, and in particular withholding tax compliance as it relates to non-US persons. And they found billions in reporting discrepancies. And so some low-hanging fruit there, and it's things that we see in practice today in queries that we get from the IRS, is really a new focus on reconciliation. And so they're actually asking a lot of withholding agents and QIs in particular to demonstrate compliance. And in particular, demonstrating compliance, it's demonstrating and proving that you got the tax liability that you owe on the current rules correct today. And so these queries are coming in for the 2015-2017 certification period, so that they're looking back. And as a result of that audit, I think they're looking at data in a new way. And so the question here, I think, is, will the tax administration in the US continue to process data better? Will they have a better understanding of the gaps? And what will that mean in terms of, compliance programs outside of the US and how they deliver compliance? So that's something I think that we're going to see more of over the next 6 months.
Okay. Great. Thank you very much. Daniele, something to add? Do you want to add something on the discussion we just had about US elections and the changes we might see in the next, as Daniel just mentioned, 6 months time or even earlier?
Sure. I mean, I would just add, particularly to what Denise had indicated, that we do expect President-elect Biden. His goal is to raise the top income tax rate. We're seeing individuals of top earners, the goal would be to go from 37% to back up to the 39.6%. For corporations, the goal would be to go from 21% to 28%. The big but on this is that is not happening if you have a split Congress. And we've got 2 Senate races in Georgia. I'm not going to predict it, but I think most people here feel that the odds of Democrats taking both of those races are pretty slim. And so there is an expectation that we'll have a split Congress, which makes those tax changes very difficult. On the other hand, and I think Tara alluded to this, you will see, he does have the power without the Senate to do executive orders. He does have the power to do vast changes in Treasury. And so all of the regulations that came out under Treasury could be pulled back and could be modified substantially. So he will still have a lot of power, but in terms of raising those top income tax rates, well, that may be his goal. It's unlikely that that'll happen unless the Democrats sweep both houses, which, again, it's not looking super likely.
Okay, thank you very much, Danielle.
By the way, with the exchange of information for FATCA purposes, that was always a goal. That was a goal of the Obama administration. He had that on his plan, but he didn't have both houses, so he couldn't enact it. I think that's likely to be the case with President-elect Biden as well. Without having both houses, it's harder to get that legislation passed, which would be necessary.
Okay.
Thanks.
Okay, great. Thank you very much, Danielle. Okay, let's move on to the other subject, which is the QI checks and its QI audit, which is basically, for the time being, still done with physical forms. It's still to be done, sent around the globe, and we have quite a lot of documentations, like more than 30,000 of reports to be sent. So therefore, is there something that we might foresee to a kind of automation, a kind of checking before being sent around the globe? Or if there's even something that could be a bit more digitalized, like the channel we had before. So is there something planned, let's say, Tara?
Yeah, so a couple of points. I think just as we all struggle to secure IT budget, the IRS really struggles as well. So I think we've all seen issues in the QI portal itself that I don't see changing in the near future. I think you also mentioned, the way that we're doing the QI reviews today. Most of those reviews required us to be in person. That's not really happening in this environment. And so QIs are needing to come up with creative ways to do their QI reviews. And the IRS just recently said last week that they don't have any plans at this time to provide any additional extensions, despite the industry asking for those extensions. And then as far as the area of focus, we've really been seeing a lot come out of the IRS on both the U.S. withholding agent side and the QI side on the checking of the 1042. They've implemented their own sort of data analytics that they're doing on the back end, where they're looking at 1042s received by income type and 1042s going out by income type, and looking at how those reconcile for the QI. That was the most common QI issue that we saw in the last periodic review. And it's coming into this new cycle. And not only are they seeming to ask us to do the 1 year in the periodic review, but they're seeming to ask us to do all the years within the periodic review period. So it's a lot of work, and it really mandates that people have the reconciliation process as a best practice. We also saw the IRS announce that they're going to come out with this validation check website that's free to use to run checks. But they said that those checks are very preliminary in nature, They're really not intended for a large, sophisticated institution. They're really out there for the smaller institutions. And just because you run that check and then file your 1042Ss, that doesn't mean you're free from exam. They have more sophisticated people doing more sophisticated analytics on the back end that are then looking at whether they want to further their questions on exam. So just because you might go through that new offering that they're going to produce next year and go through it with flying colors doesn't mean you're out of the woods as far as questions from the IRS.
Okay, great. Thank you very much. We received a question basically on the US and with regards to a fact if the US will join the CRS. And I guess this is something where we are looking to you, Daniela.
Oh, sure. I think there were a lot of people, at least in the former Obama administration, who thought that the U.S. should join CRS. But again, in order to comply with CRS, they have to be able to exchange the information required. And in order to do that, they need to be able to pass legislation. So even though there were a lot of people who thought it was a goal, we had, the head of the IRS saying that we should be joining CRS. They can't do that. They can't exchange the information required without legislation. So again, it may be something that Biden and the Democrats would be open to, but unless they take the Senate, I don't think it's going to be likely.
Okay. There's another question that's just coming in, and unfortunately, we only have a few minutes left, even 2 minutes. So there's one question with regards to the view that Brexit could mean that the UK entities may not be able to rely on the equivalent beneficiaries. Is there something that you would like to pick up, Daniel?
Maybe just briefly. It's certainly a hot topic in the UK market, and there's a lot of discussion on it. And some of the comments that have been made essentially that in the treaty, there's the competent authority procedure that's meant to deal with some cases like this. And the competent authority office in the US is fully functioning. They're pretty digital in terms of my experience with them. And so I think that's a specific it depends on the facts and circumstances, but there's basically an escape hatch there if you've got the right facts.
Okay. Great. Thank you very much, Daniel. We still have one topic, which is the 871M. Unfortunately, we don't have much time left. So maybe just one point to add on that, maybe a question to give around with regards to 871. Will we see in the next future also the non-Delta One products to be subject to this famous reporting? So maybe a question to Denise.
My expectation is yes, that we will, especially if we, with the change of administration and changes within Treasury, it's likely that those regulations will be expanded. There have been a lot of discussions that they would potentially be scaled back. I don't envision that happening in the near future, if at all.
Okay. So I would like to thank you all of the participants and also basically all the experts, single matter experts in here together with me. Maybe one last question to add on the question about 871M. Is there anything kind of a key area for US tax where we should watch for the next year, let's say in 2021? Is there something or some major changes that will ahead of us, or is there something you just may think of if you are the experts around us? Maybe Tari, do you want to add something on that?
Sure. I think the IRS just released an FAQ earlier this week talking about 871M when you're an intermediary. And if there is an issue in your QI review that's really related to 871M, which we see a lot because of when you're holding a dividend equivalent or a structured note in custody that has an 871M relevance to it, it's possible that there could be breaks in the chain of 1042S reporting that could cause, for instance, a reconciliation issue or late issuer information that could, for instance, cause a withholding issue. And so if you have those issues come up as part of your QI review, but you've made good faith efforts to comply, they've now asked through this FAQ or allowed in this FAQ for QIs to attach an additional statement explaining that. So QIs should be looking at their 871M process. I know for a fact that when I've been doing 871M reviews and health checks, both on the QI side and the QDD side, we've noticed a lot of common issues around reporting. For instance, we've seen people issuing 1099 for dividend equivalent accounts to U.S. persons, and that's not the way to go. That's just not what you do. It's not, there is no such thing as a dividend equivalent to a U.S. person. So it's really important to be checking your process and start to make those good faith efforts to get this right. And then I think, as Denise said, we're hearing a lot of discussions about what 871M should look like. And there are discussions going on with Treasury and the IRS about the 871M non-Delta One instruments, as well as some issues that are specific to QDD, like net delta. So I think it's time again for industry to go in and start having those discussions with the IRS and Treasury.
Okay, great. Thank you very much. Maybe the last word from you, Daniele, about the future changes that we may see.
So what I'm really interested to see is the rider to the QI agreement. Things are changing, and big changes are coming to the QI process, in particular on publicly traded partnerships. This is going to require a completely different operating model. New data needs to be consumed, processed. It needs to be provided to other counterparties. The withholding tax system is a little bit different than what people are used to. And so I think, what I'd be looking at is sort of back to the tax service point. Is this something, a market that you want to play in? Feasibility of being able to deliver compliance, and then the options around that. How do you do it?
Okay. Thank you very much. Daniela, last word.
Sure. I think in addition to the changes in 871M and obviously 1446F, I think the other thing we might see is the IRS following up a little more with the intercompany exchange, the information. We've seen them start to do that and do more requests, but they're still, in the infancy stage of starting to request information. I think that we will see them probably get more aggressive on that, especially as we're past the transitionary period now. So I do expect to see further requests and further detailed requests from the IRS.
Okay. Thank you. Nice. Yeah. Thank you very much for all of you. We exceeded by 5 minutes, but I guess it was really needed to cover at least these three subjects. I'm quite sure we could exceed or extend it to additional 5, 10, 15 minutes, seeing all the US development subjects we may go or we may lead. But thank you very much once again. It was really a pleasure to hold this virtual webinar with you, the four of you. And so again, thank you very much, and looking forward for the next webinars to come. I'm quite sure we will have more often the possibility to sit together, potentially just virtual, seeing the COVID-19 situation, but maybe in the near future also being available to sit around the table. So thank you very much, and back to Thilo.
Thank you.
Thank you.
Thank you.
Bye.
Thanks, Alexander. Those were basically already some good closing remarks. Let me thank again all the panelists for their contribution, for their time. Thanks to all the participants for listening to us and watching us here on YouTube Live. Just a few remarks before we close, or observations rather. For me, TRACE seems to be clearly in its infancy. We absolutely need standardization across the markets where the TRACE will be adopted. Otherwise, we will just get single market solutions again. And it's not something that TRACE was set out to do. From a digitization perspective, not quite there yet. If I take it, clearly concerns need to be overcome and addressed. But more importantly, I think for me, it's at least clear that there's no way to going back to a pre-COVID sort of setup where we have wet ink, paper documentation going back and forth, that we cannot and we shall not go back to that situation. So I'm a glass half full man on this one and hope that that's going to work. Allow me to thank you everyone again. Thanks for the participations. Thank you also for the questions. We were not able to address all of the questions. We have a number of them in the background that we'll try to cover either in the next session or speak to you individually if that's at all possible, if you want to reach out to us. Thanks for the team for making this happen. Please, everyone, if you have the time, do respond to our short survey. It really helps us improve. This was our first session. We'd love to do more of these. I felt that the flow was going better towards the end of the presentation. We had a bit of problems with connectivity and microphones at the beginning, but that's, I think, very natural. And with this, I wish you a great and successful remaining week. Stay safe, stay healthy, and we look forward to having you all in our next TEX webinar. Thank you very much, and goodbye.